I sold ASML before one of the biggest hikes in their price, and my investment thesis hasn't changed. So why did I do that? And what have I learned? I'm 17 years old, and tomorrow I will be 18. A quick disclaimer, I'm not an accountant or advisor, so these are all my thoughts here. That change is what made me think of opening an account and selling all of the stocks I owned on my father's brokerage account so I can buy them on a tax advantage account here in Poland. You have two options if you want to invest tax free: IKE or IKZE. IKE is my preferred way as it allows for zero taxes after the retrieval of funds of the account. IKZE is a bit different as it takes a 10% cut after closing the account, yet you can write off the amount you paid into the account from the taxes you have to pay. So my initial plan, which was flawed, was to sell 3 positions each day in 1 week in September. So when my 18th birthday happened, I would be ready to buy stocks all at once. What I didn't know at that time is market risk, which is inherently unpredictable. I sold ASML, Adobe, and Booking. I plan to buy ASML and Adobe again. Booking is a stock I won't buy as my investment thesis didn't even exist at the time of buying. I purely bought it because a YouTuber I liked, Joseph Carson, presented it as undervalued. So you can see I was totally in a different mood then, I had a different investment philosophy. I was more dependent on the views of others, and I'm taking back control. Let me just say that even though I made money, this wasn't my research which got me there, and so I wasn't happy about that. I need to do my own research, so that's why I will be selling my booking position. If I find out that it matches my investment thesis, I will rebuy it, but I need to make my own decision. Another stock which I will be selling is Caterpillar. I bought it purely because I saw James Bond in one movie being in an excavator that was moving by with a train, and I just thought, wow, this is awesome, this looks like a tank. And so I looked at the fundamentals. Oh, this is a interesting company, I want to buy it, and so I bought it. I haven't even bothered to do a valuation check at the time of buying. This was in 2023, in I think October or November, and so I did that. Well, let me just say I made some good gains on it, but you know, it was a silly way to invest my capital. It wasn't responsible. Did that have an investment thesis? Absolutely not. It was bought purely because of one person, James Bond. And I know this sounds silly as to, well, what I'm doing right now, but that's the truth. I need to be brutally honest with you. I won't be buying a company like Caterpillar again. Instead, I will be focused on more capital light companies. And some of the companies which I will be looking at right now as undervalued and potential buys are Duolingo, S&P Global, Dino Polska, and Text SA, as well as Adobe, of course, which I believe has really good potential for growth. I actually see them as being heavily undervalued, at least $500 per value. I want to explain my thesis on Adobe and why I'm so bullish on it. Adobe is the undisputed leader. People choose them because they offer a much more enhanced experience than other companies in the sector. It's true that the fees that they charge you for canceling a free trial can be hidden somewhere, but it's also true that many people depend on their software for the survival of their business or career. They need to know how to use it. Take YouTubers, for example. I personally developed in an open source program, but I hear from time to time that YouTubers use Adobe Premiere Pro for video editing. Adobe is a hated stock right now, and I'm taking advantage of the situation. But if we take a look at their valuation, even a very conservative one is great for us. If we take a look at the CAGR over here, over the past 3 years, we can see that it's at 10%. This is a high number, for me at least. As well, considering Adobe isn't the next high-tech startup, the revenue is also consistent, with a stable revenue growth of 10%. So it doesn't matter what the media are saying, what matters is how you interpret the numbers that you see. And you should pay close attention to them and not watch some CNBC interview with some stock analyst who has a very bad rate of being correct. So you should interpret those numbers in a good way. But of course, take all the negative sentiment as well and examine it like a detective. But for me, I think that Adobe is safe. AI isn't perfect, and people won't want to have their jobs taken by AI just yet. People are a bit, scared and uncertain what this AI will give us. So they will want to have control right now. AIs don't create what you envision exactly. Even Nano Banana or, Google's Imagen AI for photo creation and editing, well, it doesn't create exactly what you like and what you imagine in your head. I talked to a worker in one of a media company that is in Poland, and he explained that in his company, they only use Adobe's products. He also told me that when an AI is generating something, the workers just sit there doing nothing. That is also a thing to think about, you know? So, the big takeaway here is that when you move stocks between portfolios, you gain exposure to market risk. And it's possible that you will buy a company at a different price point. You should always try to minimize the time between the selling and buying of your moved stocks. I didn't know that and paid the price. Also, a company like Mondelez isn't the kind of a company I will rebuy in my portfolio, as it's very much dependent on the price of coca for its revenues. If you haven't checked out my Substack, check it now. It's free. Thanks for watching this and stay focused on the fundamentals.